we detected an unusual trade worth $500,000 on ROST Stores stock, ticker symbol ROST. And so, in this video, we'll break down this unusual options activity to figure out whether this wealthy investor is bullish and buying, expecting the stock to move higher, or bearish and selling, expecting the stock to move lower. Because, as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, to make smarter, better financial decisions. This is how smart money always stays one step ahead before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into our analysis to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. Now, if you are in our membership, you know that we already got into a trade position just a few weeks ago, on this day, June 26th, at the bottom here, when we first detected an unusual trade on ROST Stores stock. And ever since then, the stock has gone up by about 8%. So how did we know to get in early? Well, we were tracking a wealthy investor who took a long bullish trade before this rally. As you can see, this was the email we sent to members, alerting them of unusual option activity detected on June 26th. And so we analyzed ROST Stores and went long bullish when the stock was trading at $126.89 per share. Now it's trading at $137.17 per share. So it's already a profitable trade because we got in early. And so if you want to start getting access to these trade alerts, including real-time updates, detailed analysis, and earlier entries, sign up on our website. We'll put a link up here. You'll get direct access to the trades of wealthy investors and potential insiders, so you can see what the smart money is doing before the trade becomes highly profitable. Now, speaking of profits, how much did this options trade actually make? Because knowing exactly how much profit was made is what allows us to update our trade into a no-loss strategy with no capital at risk. So let's break down our trade, the same trade made by this wealthy investor, these August 15th options at the 135 strike calls. This investor bought a total of 9,000 contracts at a price of 1.70 each, since options prices are shown here, and each option contract controls 100 shares of stock. To get the dollar value, we multiply by 100, or simply move the decimal 2 places to the right. That means each options contract costs $170. And so let's take a look at how much these options are worth now, as we can see here on the option chain for the August 15th options at the 135 strike calls. These contracts are currently valued between a bid price of $470 to the ask price of $500. And remember, these options were only going for a price of $170 each when we entered this trade. That's why our trade is very profitable. And so we started to close our positions here to take profits and rolling into a new trade. POS stands for our position, and the green color indicates a buy position. So why did we start closing out some of our contracts? Well, notice how there are now 3,599 open contracts showing in the open interest. This is less than the 9,000 contracts that were originally traded by this wealthy investor on June 26th. And so this tells us that some of their contracts have been closed already. That is why we are also closing to lock in profits. And so how much profit did we make so far? Well, let's take a look at our analysis when we entered this trade using the risk profile graph, where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is trading over here, and the y-axis represents the amount of profit or loss. Keep in mind, this graph already factors in the cost of the trade. That's why you can see on the blue line that if the stock had dropped, it would have been a negative $170 loss per contract. But since it went up to about here, we have a profit of $327 per contract. And so to calculate the profit percentage, we take $327, divide it by the initial cost of $170, and then multiply by 100 to express it as a percentage. And that gives us a return of 192% profit. In other words, we made nearly double our original investment on this trade. And so this is yet another real-time example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. Because understanding where smart money flows gives us deep insights into potential stock moves in the market. The rich often have better access to information, sometimes even leaked insider information, that help them make smarter financial decisions. It's no secret that the rich get richer when they trade based on deeper insights. And so, if you want to get access to more of these insights from the rich, then just head over to our website. We'll put a link up here where you can see exactly which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that being said, not all trades by wealthy investors are winners. Some end up as losses. That's the reality of trading. And so, to stay consistently profitable over the long run, we use strategies with a better risk to reward ratio to maximize profits and minimize losses. So as a real-time example, let's go over how we use new data to update our trade here into a strategy that gives us more upside potential while keeping risk under control. And so, as we mentioned, we started closing these 135 strike calls by selling them, locking in profits, and rolling into a new trade we just detected. As you can see here on the options time and sales tape, an unusual trade happened on July 23rd at 10:24 a.m. at the 29th second mark. For these August 1st options, at the 136 strike calls, 142 strike calls, and the 134 strike calls. And based on our deep research across multiple variables and data sets, this wealthy investor was closing out these 134 strike calls and rolling to higher strike prices. So this options trading strategy, known as a vertical call spread between the 136 strike calls and the 142 strike calls, is the new opening trade. And so we can calculate the cost of this new trade. We have a price of $275 at the 136 strike calls, subtract a price of $49 at the 142 strike calls, which equals $226 per contract. And since there was a total of 2,832 contracts, we multiply that out, and this equals approximately $640,000 for this unusual trade. And so we targeted these same call options for our risk management strategy by rolling into them from our previous position. As you can see here on the option chain, for the August 1st options, we have a new position at the 136 strike call options and the 142 strike call options, the same options we detected. While the green color means a buy position, the red color indicates a sell position. And notice how there are now over 3,000 contracts opened at these positions, showing strong interest in these options. So that is why we used our gains from our previous position to buy these 136 strike call options. And we also sold these 142 strike call options, setting up the same vertical call spread. And this option strategy costs less than the amount we sold the previous position for. That means we entered this new trade at a credit, not a debit, making it a risk-free setup, using only profits from our earlier trade. And so, when we analyze our trade now, you can see here on the risk profile graph, the buy position cancels out the sell position, because they are the same August 15th options at the 135 strike call options. So we are just left with the vertical call spread at the 136 strike calls and 142 strike calls that expire August 1st. And so on the graph, we can see that if ROST Store's stock goes down, our trade would not have any negative loss because we've locked in more profits than the cost of our new trade. And that is how we manage risk, by minimizing losses. In this case, we eliminated any possible loss while still giving us the chance to gain more profits if the stock moves higher. But keep in mind, this was only possible because we followed this wealthy investor early, back on this day, catching the bottom before the stock rallied. And so now we're holding a risk-free trade with no possible loss. So if you want to get exclusive access to our analysis and trade alerts, just like this one on ROST Store's stock options, then sign up on our website. We'll put a link here. Because the next time a wealthy investor makes an unusual move, you'll want to get into that trade early, not chase it after the rally. As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.